Thank you so much for joining us. Just really quick, what do you think about the market? Where do you see M&A going?
Well, morning, Julia. It's great to be here. I think it's a great question in these times. The times are, I'd say, still a little uncertain. I'd say overall, from an M&A point of view, the key driver that's probably still not yet fully in place is visibility. And I think that comes through in both global markets and domestic markets, driven by a number of things, driven by, and I'd say, kind of new factors, including government intervention in the economy. I think we're all sort of standing a little bit on the sidelines still, trying to think through how that influences deployment of capital. My point of view, I'm involved in deploying capital on behalf of investors as a financial sponsor, the Mountain Capital. And so our mission is to go build great businesses. And we get our returns by driving earnings. To do that, we have to really think through where the markets are going. And that visibility factor, I think, still remains to...
When do you think we'll be more visible? When do you think we'll get more certainty?
It's getting better. I'd say the big question mark out there now is what happens when debt capital costs something again. Okay. So when the sort of the easing that's been going on, both in the States and globally, starts to ease and starts to taper back, yields start to go up, cost of capital increases. The question will be, where are we then? I think that's the big question. I think everybody's...
What's like a normal environment for you? Like, I don't know, 400, 500 basis points more than today's environment?
Yeah, it's a great question. Like, what's the new normal? I think everybody's wondering that. I don't think anyone quite knows because you have to look back now.
Yeah, because several years ago, if you say money would be this cheap, people would call you crazy.
Exactly. Yeah. And so you kind of get used to anything. Right now, we've gotten used to the environment we're in. I think the equity markets are reflecting that. Certainly the deal M&A market's reflecting that. But we all know this is coming to an end. There's a party that's coming to an end here at some point, and the question just is how comfortable is that tapering when it happens?
In terms of the deal-making space, are you optimistic?
I'm very optimistic. Okay. And I'm very optimistic because while from a macro point of view, growth may be slow, if you look underneath the covers, there's fast growth being driven by fundamental change. So for example, the US now being energy or independent is a huge issue that hasn't really been factored in anything truly yet, because that'll be deployed and rolled out over 10 plus years as sort of gas liquefaction happens. There's just a huge growth that's not really factored in a lot of ways to employment numbers, people's future career plans, capital deployment. I mean, a lot of wealth is flooding into that zone right now from an investment point of view, but it's still early days. So obviously healthcare is transformative at many levels. Companies that have been B2B becoming B2C, and all the acquisitions associated with that. So I'm very optimistic for those that are putting the work in to do M&A well. I think there's quite a lot to work on.
Nowadays, it seems like a lot of people are optimistic because the economy is recovering. The question is, how fast do you think we are recovering?
Yeah, I would say I'd be on the page that says, sort of slow and steady. We see a lot of enterprises. I'd say most of them are performing pretty well. Not many are really crushing it and just blowing the numbers away. So not that many are missing wildly either. So it feels like we're in a steady growth zone right now.
But still a little bit uncertain.
Yeah, but the future remains a little uncertain. So it's a good time to be thoughtful and cautious.
Right. A lot of money on the sideline, I feel. People, they just hold cash and they say, I want an opportunity, but it's not really apparent where it is.
Yeah. And I think that's all about visibility. I think folks will lean into the risk assets once they have some view of how to calibrate risk more carefully and more clearly.
What do you think is the best thing a deal maker could do to maximize visibility?
It starts with having a thesis. It starts with having a view of the macro environment and knowing what you're trying to get accomplished, knowing how you're going to create value in this environment and for whom you're creating that value and at what price you're creating that value, so that you're doing something that, let's call it relevant. So if you're doing something that's relevant, then all the rest follows behind. If you don't know what you're trying to achieve from a creating an asset base that delivers a value proposition, it's very, very hard. I think then it's really tricky.
So basically know exactly what you're going after.
Yeah,
do your homework, do your
understand your thesis, understand your objective, the value proposition you're trying to drive, and then organize around it.
Do you think there was a period of time maybe people were like, oh, I just want to get some deal done, I want to get my name on the map, and therefore I'm just going to go for it no matter what?
Yeah, I mean, I'd say that just, at a time when the broader economy was fueled and it was sort of growth across the board, picking your spots was less of a challenge. But at the same time, a lot of that was fueled by a lot of leverage that ended up, in blowing up. So a lot of it was not really would consider, fundamental growth. It was more, it was sort of growth fueled by just an environment, and it probably outstripped fundamental growth. So now we've come back to more fundamental growth, and I think it is more tricky now. And I do think at a time when everything's just going up, people can get swept up in it, and that's when you have to be disciplined. I think great investors are disciplined in that environment.
Could
and in
I
this
say
environment.
nowadays deal makers are a lot more risk averse?
I don't know that's true. I think great deal makers are both risk averse and looking at opportunity all the time. I think like everything else, you have a culling, and you have the great advisors and the great investors remain, and those that kind of got in when times were really frothy haven't done so well, and they've probably gone on to do other things. So I think the fundamentals were there before, the fundamentals are here now. It's just more obvious that now the fundamentals are what drives the returns.
Thank you so much.
Thank you, Julia.